What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Friday out there. Hope you guys had a good week. Hope you're having a good last day of the week, getting ready for the weekend. Big week for Bitcoin. So we're going to go over the charts. We're going to talk about some of the current events, talk about the Bitcoin Strategic Reserve briefly. Tom Lee was on CNBC. I'm liking his stuff more and more, so we're going to listen to that. Also, Powell got the most interesting question I've ever heard a chairman of the Federal Reserve get at a press conference, so we're going to listen to that and then go over my posts that I put out this just today on Forbes and on my own website. So let's jump right into it. Of course, we always start over here at bitcoinandmarkets.com. You can see this one, housing costs. This is a little controversial, and I'm not quite sure about it, but this is some unique analysis, is a unique framework to look at this question. And yeah, so we'll go over that one. And then where's my Forbes post? I just want to bring that up at the beginning here. Where are we at? Right here. Lots of ads. But Trump's credibility hinges on this day one promise. You guys probably know what that is. But all right, so let's go into Tom Lee first and listen to what he said on CNBC, because I'm liking him more and more. I when, maybe 4 or 5 years ago, I didn't really give much credibility to what he's talking about, but recently he has been sounding very, very common sense. So let me zoom in a little bit on this. And we will take a listen, make sure the volume is up. All right.
Join us now on the markets, Tom Lee, head of research at Fundstrat Global Advisors, chief investment officer at Fundstrat Capital. And the list goes on, and he's a CNBC contributor.
That's got to be uncomfortable. They do a zoom in right on your face when they're introducing you like that.
First post-election appearance that we've had. You knew Trump was going to win.
Well,
not many people did.
Yes, that's.
I'll give you credit. Are you saying you did?
What kind of question is that?
Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas, that's.
And you saw it in the Trump trade,
yes.
And you saw it in Bitcoin.
Correct.
And you saw it in sectors of the market that would benefit from.
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points a meet out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a.
So what do you think that should be?
All right. So he's saying there's a lot of upside because people took money out of the markets going into the election. I agree that there was large cash positions. There's look at Warren Buffett, right? He has been selling a lot of his stocks, and he had the largest cash position. I'm not sure exactly what it was at the time, but that is just representative of kind of how the entire market was feeling leading up to the election. But that has been building for a long time, and the stock market has been going up and up and up. So that doesn't really quite explain this. You have to, he's talking kind of medium term, like maybe over the next quarter, it still has room to the upside or stuff like that. But it doesn't, it's a little bit too, I don't know, it's short term, because even though maybe there was some uncertainty in the week leading up to the election, the stock market had been rising for a long period of time, about 12 months. And that's leading into the election as well. So what explains this longer term trend? And just continuing on the longer term trend. We're not breaking trend at all on the S&P 500 or in stocks. And so I think you have to have a larger framework for that. And of course, this is just a soundbite, so he doesn't have time to like dive into some of his deeper stuff. But I would say, look, nothing has changed. There's maybe a marginally higher amount of optimism out there in the market, which we see with the recovery back to all-time highs and continuing in this long-term trend that we've seen over the last 12 months, but nothing really has changed. And then you have to say, well, if all of these indicators are saying we're going into recession, how come stocks are going up? Well, because this is what happens before a recession. Always, stocks go higher before a recession. Then when we get imminently into a recession, that's when stocks actually fall. But of course, he doesn't have time to go into stuff like that.
12 times? What's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking.
He gets into Bitcoin here in a second.
About the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
Bingo. What have I been saying this whole time as the 10 years been going higher? And the long end of the yield curve is going higher, not the shorter end. So if we're talking about 2 year or 1 year, or even the bills going down to the 3 month, those things are falling. It's the longer term bonds that are going higher. So they're fighting each other. So he just said, don't fight the bond market. Okay, of course. But the bond market is fighting itself right now. And what does that tell you? Well, one of them is wrong, most likely, because they're not telling a similar story, the short end and the long end. If this was a inflationary, reflationary, real growth story, they would all be rising together because yields rise in good times.
Thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe the sweep the other way would have been a little more frightening to some.
Yeah. I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I kind of agree with the idea that there are animal spirits growing.
He'll never be deficit friendly, will he? He will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that
get rid of the income tax in total. That's basically what he's promised.
That seems like
it's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
So you were at 150, I think, on Bitcoin, weren't you? But
yeah.
Not necessarily by the end of this year, or?
I think 6 figures is still possible before the end of the year.
So he's just saying not like backing the dollar with Bitcoin, but having it as a strategic reserve. And so it counts as assets on the balance sheet and it offsets the liabilities. So if we have growing liabilities, which is the debt, and we have growing assets, then that's a good thing. It wouldn't necessarily even affect the debt to GDP ratio, but it would affect assets to liabilities for the government, which is kind of the argument that Lummis has been making. So there you go.
Yeah.
And then more next year and the year after.
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P.
It's hard to make an argument why Bitcoin would go down right now. Everything is bullish. Mount Gox done, selling pretty much. They've extended it out another year, but it's only a marginal amount that's left. German government is done selling. The regulatory stuff has been taken care of for the most part. IBIT, the IBIT Bitcoin ETF just overtook their gold ETF. Their gold ETF is 20 years old, and their IBIT ETF is 8 months old. So the demand is there, about 20 times greater than for gold. And we've seen what gold has been doing very recently. And so it's just an exciting time, and there's no bearish narrative out there at all. I mean, of course, that's dangerous if everybody is on one side of the boat. But I just saw a image from somebody else. Let me see if I can pull that up real quick. And it was showing shorts and longs, and there's actually more shorts in the market right now. Was it? I think it was this guy. I'll have to share my screen just a second when I get this up. Yeah, here we go. So from Philb, he's a longtime Bitcoiner, been on Tone Vase several times to talk about charts and stuff. But you can see this latest long-short ratio is still 75% short. Is that right? No. Is over 50%, 57% short and 43% long. So we're not all on one side of the boat. It's just narratives right now. There's no FUD in the market. There's no FUD to drive the price down. So that's that. Let's continue on, see what else he says. Just a couple seconds left.
End of next year.
Well, between now and year end, 5 to 10% is probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and, the real rate is still too high. So I agree with Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and, business investment has been constrained. So I think these things are positive.
No mention of recession timing or anything like that. I mean, that might be irresponsible for him to do. I don't know. But okay, let's move on to the next topic. But before we do that, let me check comments, see if there's anything out there, guys, going on. BTCP, happy Friday, man. Dex Invictus, where are you, buddy? 100 people watching. I see probably most on over there on X. If you want to jump over on the YouTube and Rumble, the links are in my pinned tweet. And you can like, comment, subscribe over there, trying to grow the channel. So I appreciate all you guys. All right, I got to check Telegram. See if there's any comments over there. All right, now let's do this next one. And this is Powell at the FOMC presser yesterday. Now, we did a live stream here for covering the actual policy statement drop at 2 p.m., then the press conferences at 2:30. And I didn't have time to do the whole thing, but I hope to go back and listen to this in total. Maybe that will be a Telegram exclusive. I'm not sure. But this is the most interesting question that I've ever heard asked of a chairman of the Federal Reserve. So let's go.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Oh, man. I just picture those glasses coming down, like the gangster glasses coming down and resting on Powell there. Yeah, so there have been rumors. We did actually talk about this yesterday in the live stream because CK jumped on and he asked me about, or he jumped in the comments, I guess, and asked me about if I thought that Powell was going to get fired and all this stuff. I didn't think he would. And this makes it seem more like there's a real possibility that they're going to try to fire him or something. But there's nothing in the statute. So let's go to this Forbes article from a while back. Actually, no, it's from today. So they're saying, hey, can Trump fire Jerome Powell? And we'll just go to these bullet points here, the key facts. So Powell turned down the idea of leaving his position, and when asked at a press conference Thursday whether he thought he'd be required to leave if the president asked him to, he said no. Firing Powell from his role as chairman is a bit of a legal gray area, according to American think tank Brookings, which noted there is no statute that includes details about whether a president can remove a Fed chair, and that other presidents have determined they lacked the authority to fire someone from the position. No president has ever attempted to remove a Federal Reserve chairman from their role before, though, so the authority to do so has not been legally tested. An unnamed senior Trump advisor told CNN that Trump will likely not try to remove Powell during the rest of his term, which ends in a year and a half. I think it's May of 2026. Federal Reserve experts also do not expect Trump to fire Powell, according to Market Watch. Okay, so this is kind of what I said on yesterday's live stream, that it probably won't happen, that probably be blamed for the recession, the coming recession, and Trump and the banksters will make a deal. So one thing that's come up in this conversation is that the Fed is owned by private banks. They have private shareholders. They are not owned by the federal government. They are only overseen by the federal government, where Powell has to go to the banking committees of the House and the Senate and testify, answer questions. And then also all the governors and the chair are nominated by the president and confirmed by the Senate. So that is the checks and balances on this private institution that's called the Federal Reserve. It's neither private nor reserve, right? It doesn't have, I guess it has some gold, and we want it to hold some Bitcoin, but it's not federal. And right now it's not holding enough of anything to be an actual reserve. But so I said that this probably wouldn't happen. However, if we do go into a bad recession, this Powell is going to be a great scapegoat for Trump. So Trump can say, look, Biden and Harris ruined the economy while I was gone for 4 years. And now we're in recession. And now this guy at the Federal Reserve, Powell, he isn't doing anything. So maybe down the road, 6 months' time, we'll revisit this conversation. And if they're really blaming Powell, maybe the whole conversation changes. Maybe Powell does want to step down. Don't know. But if he serves out his term into 2026, he can get replaced. And then whoever is the next president, is that Fed chairman will carry over into the next presidency. If he replaces him too soon, then that Fed chairman, it won't overlap as much. So it's kind of strategic when you appoint them and stuff like that. So anyway, that's what I'm thinking for this right now. And that was all for that. Let me check comments, see what you guys are saying. Do you guys think that Powell will get replaced, be forced to bow out? What do you think about his job so far? If you're new to this podcast, I have been saying from the very beginning, going back in time to Fed Watch like 3-4 years ago, when CK and I were constantly watching all of these press conferences and doing all this stuff with the Federal Reserve, we were like, Powell's a straight shooter. I think he's probably the best Fed chairman out of the last 3, 4, 5. I think he's even better probably than Alan Greenspan. And so you would have to go back to Volcker, and Volcker was he has mythology around him, but I don't think he was that great either. So, you had to go way back in time to find a Federal Reserve chairman that is as good as Powell. Of course, he's good in the sense of the traditional system. He's not good in the sense of like how he views economics, just how he's managing the Federal Reserve. But that's a way deep rabbit hole. Don't see why Trump would fire Powell personally. Yeah, Powell's cutting. They'll make a deal. Trump will say, hey, I'll back off, but you got to start cutting more. I want to see 50 basis points at 2 more consecutive meetings or something like that. So that'll probably happen. But also, the Fed just follows the market. And if we are going into recession, the Fed is going to cut anyway. If the 10-year turns over here and starts going down, the Fed's going to follow the market lower. Okay. And that might be before Trump even gets inaugurated. But the path forward for the Fed is cutting at this point. And that's going to agree with what Trump wants. It's just going to be a question of speed. Like, how fast do you want me to cut, Mr. President? Just don't replace me. Don't make us find out what the legal status of this conversation is. Take it to the Supreme Court or whatever they would have to do. I don't know. Maybe they would have to pass some bill through Congress and then they could fire him. I have no idea. But, let's not find that out, Mr. President. How fast do you want me to cut? Just don't replace me, because they're going to be cutting anyway, right? Okay. What else we got? Let's see if Telegram has anything. Larry Jr. You say Powell's response was uncharacteristically blunt. Yeah, it was. He did not want to go into it. He definitely did not want to continue that conversation. No. That's all he had to say. Yeah, he was annoyed. And, Powell knows who he works for. He works for the banks. And he's very versed in the statute, what gives him power. When they've asked him in the past about CBDCs, he's like, that's not in our mandate. And of course, if you're serving as chairman and you've got there through a meritocratic system, which he's not a DEI hire. Okay. He's gotten there through a meritocratic system. He was nominated by the banks or pushed by the banks to be nominated by the president. So he's very, very competent. And so of course he's going to know the statutes and all that. And he just did not want to get into it at all. Umbracious. Lords of Easy Money. I'm not from. Is that a book? Doesn't make Powell seem great. Just has a bunch of followers. He works for the banks, inking deals with Credit Suisse. They sure know how to run things. Yes, he's for the banks, not us. Yep. Yeah, and he's a lawyer by trade. He's not an economist. So he has a little bit different outlook on it. Okay. Tom Honig, is he a governor? I don't know. Did he dissent on this one? What did he want? Christopher Leonard's book from a few years back. Okay, I'll have to take a look at it. I have not bought a book in a while. I go in spurts. So it's been about probably 6 months or maybe even 9 months since I've bought a book. But then when I buy books, I buy like 5 to 10 and I go through them. So I'll have to take a look at that one. Okay. Let's go on to the last thing is the charts, and I'll keep checking the comments so you guys can put that down there. Okay. So Bitcoin. The Bitcoin chart here is looking good, 76,600. It broke 77,000 today, got all the way up to 77,270. It looked like it was about ready to go higher, but not quite yet. This morning on Telegram, I said, hey, I would love to see 80,000 today because, just continuing to break out, and then we can consolidate over the weekend and maybe even into next week. But 80,000 would be a good place to end the week. Of course, we didn't get there. Won't have much action over the weekend. We might even see a little dip over the weekend, testing the previous all-time high, perhaps, maybe going into the first part of next week, and then take off once again. But the inflows have been insane. Yesterday's inflows into the ETFs were 1.3, almost $1.4 billion in one day, over $1 billion into the BlackRock ETF. And we will see what they end up today. But yeah, they just keep funneling Bitcoin in there. And eventually that is going to result in a major supply squeeze. I was thinking about this earlier today. One of the things they can do is they can use options, they can use futures, they can use different trading strategies to try to manage the price as they're acquiring Bitcoin. And that would fit into like this type of price action, slowly but surely going up. So that can continue. What's going to break the dam is eventually when FOMO comes in. It could be FOMO from the boomers. It could be FOMO from other countries, like, oh my gosh, there's a Bitcoin strategic reserve for the United States. So, we need to FOMO in. It could be just retail FOMO as well. But I don't know. I'm not feeling retail FOMO is going to be a big deal this time because they don't quite understand what a Bitcoin strategic reserve is. Okay, we know what it is in our little bubble because we're Bitcoiners and we know about money and the central bank and all this stuff. But most people don't know what a strategic Bitcoin reserve means. So how can they be excited about it? That number go up is what we need, right? Number go up, that's going to get some FOMO people in. But there's no like normie narrative at this point. World computer, smart contracts, some of those things, all those narratives have been targeted at normies. Bitcoin doesn't have this narrative right now. We have a narrative of digital gold, which, yes, will attract the boomers and will attract some of that money, but it's not going to attract the FOMO retail people. And so, I don't know. We'll just see when they come in. Maybe they'll start coming in at 100,000. I mean, maybe they'll start coming in when they pass the Bitcoin strategic reserve and somebody puts it in very plain language, like this means U.S. government's buying Bitcoin. So that is what I'm seeing out there. We might just continue to go up, maybe a little bit faster at this point because there is a lot more interest coming in. But the real big move in this market probably won't happen until there's some FOMO event. So that's what I'm thinking right now. Okay, let me see if there's any comments. Oh, before I do that, let me go to the US 10-year and show you what I was talking about. So we did have a sell-off today and yesterday, breaking this trend line right here. And, if we go and we just base it off of closes, you can see this trend line going up here, and we definitely broke this. So is this the top? I mean, we do have a bearish divergence here on the daily as well. So this could be the top, and as if we are going into recession, which the base case is recession sometime coming up soon. And I've gone over many different reasons and metrics to use to make that your base case. So if that is a base case, then we should expect this to start falling because in going into recession, people are going to be moving towards safety and liquidity. That's U.S. Treasuries. And so that's why stocks usually underperform and bonds overperform if we're moving into the imminent phase, like right before a recession. But yeah, so for that reason, I don't expect this to have any sort of runaway higher on the US 10-year or on yields in general. Yields should turn over and start coming down. So those are the charts that we will take a look at. My computer's running slow right now. Hopefully my connection is okay. Let me see if there's any other comments. BTCP. Yeah, the Powell conversation, it said, reminded you of when coaches get asked about their job security in post-game press conferences. Yeah. I don't think Powell's worried about it at all. I mean, you could see kind of the confidence too in his eyes. Like, no, they can't do it. He's a lawyer, right? So he knows, he has a better chance of knowing than most Fed chairmen. Retail FOMO won't come into play until 100K or higher. Yep. Late in the cycle, I don't know. I think that'll be sooner than you think, 100K. All right. Let me check Telegram, and then we're going to call it early night. Umbracious, aren't we all waiting for a gamma squeeze on a 24/7 traded asset with no circuit breakers? Yes, we are. And I don't know when those options are coming on IBIT. Supposedly pretty soon, because they haven't been approved, and it was supposed to be trading in the first part of November. So we will see. I haven't seen any headlines whatsoever about it over the last 2 weeks. I mean, the election has been really taking all of the headlines. So we will see if that comes about. Oh, and that reminded me. I don't know why that reminded me, but let's go over some of the stuff I wrote today. So Trump's credibility hinges on this day one promise, and of course, I'm talking about the pardon of Ross Ulbricht on day one. I link to a lot of stuff, so the target audience is going to be the people that read Forbes. Most likely, they tend to be more normie, not Bitcoiners, and they tend to be maybe older. That's what I have in my mind. I don't know if that's correct, but so linking to Ross Ulbricht's case so they can fill themselves in on this. But yeah, this is a day one party would not only rectify a case many see as emblematic of government overreach, but also signal Trump's resolve to fulfill broader campaign promises. So then I go through the Ross Ulbricht stuff. You guys probably know all about him. And then we get into the credible reformer or empty rhetoric. So if Trump follows through on this promise, it would serve as a powerful indicator that he intends to keep other campaign pledges on peace, taxes, and border security, and on the Bitcoin strategic reserve. Pardon power is unilateral, so he doesn't have to go through Congress. The significance of Ulbricht's pardon would extend far beyond Bitcoin, libertarian, and tech communities. It would serve as an early and highly visible test of Trump's honesty and seriousness about his broader campaign promises. Failing to deliver on this pledge would raise doubts about Trump's ability or willingness to tackle the more complex reforms he has promised. If Trump stumbles on a relatively straightforward commitment, like Ulbricht's pardon, it will signal to both his supporters and opponents that his larger initiatives, like reshaping the tax code, ending prolonged foreign conflicts, and addressing systemic trade imbalances, do not need to be taken seriously. So this is day one test. If he fails, now we know what to expect about these other things. He's probably not going to follow through. But if he follows through here, that's going to add a lot of confidence in his, that he can take into negotiating and into making deals with people because he is serious about this. But if he doesn't pardon Ross, then he's not serious about these things, and he'll put his credibility on the back foot. So that is what this article is about. I appreciate it if you guys go over there and give it a view, a like, or a view, I guess. And then there are comments down here at the bottom if you would like to join the conversation. Oh, why did it scroll up? I'm trying to show you to join the conversation. So you can join the conversation if you'd like to leave a comment here. You can also support me more by signing up for Forbes, but of course you guys don't have to do that. And that is it for that one. Now let's go to my website and do the controversial one. And I'm really interested to what you guys have to say about this. I've already got some pushback on Twitter, but this is about housing costs, inflation versus lifestyle. And I've talked about this several times in the past, as well as on Telegram. But yeah, this is what we're diving into. So we often hear that housing is too expensive for younger people just starting out. And while I absolutely understand the challenge, it's probably tougher now than when I started out 20 years ago. There's a lot more to the story that deserves a closer look. Here's an example of the other day on X, and I will zoom in here and make it a little bit easier. And I need to make sure that I'm sharing the right thing. Okay. Here's an example from the other day. Swan Bitcoin tweeted about how homes are unaffordable today compared to 1950. And you can see here, 1950, the median home price was $7,000, which then they contradicted a little bit later, but today it's $420. Houses didn't get bigger. Your dollars got smaller. Okay, this is the important line. The houses didn't get bigger. Your dollars got smaller. And I replied, I said, houses literally did get bigger. and better, though. So 1950, they were 950 square feet. They had no air conditioning, fewer appliances, very few appliances, no TVs in 1950. Maybe by the time you get to 1955, you start getting some black and white TVs with 2 channels or something, but very few appliances, no driveways in many cases, no garages in most cases. Okay, so this is a tiny house, like this one that I have on the cover image up here on the left-hand side. A tiny, tiny house, no driveway, no garage, small front yard, 950 square feet. Okay, and then what is today's? Well, today's is 2,500 square feet. There's central heating and air. Of course, a 2-car driveway and 2-car garage are standard. You can get 3-car in most neighborhoods, middle-class neighborhoods. And then they replied back with this one. So see, now they upped it to 11,000 when it was 7,000 in their original post. But and I like Swan. I'm just pointing out that it's not all about inflation. Okay, we had to take a critical look at this. This is like kind of lowbrow look at what's the difference. So they're talking square footage and cost per square foot. Okay, so they're using a few different numbers. They must have just Googled that and found that information and then went with it because it's different than what they had and different than what I found. Okay, so making it apples to apples. My point isn't that inflation hasn't happened over this period, but that focusing only on inflation misses the bigger picture and overlooks the solutions. This is the important part. Overlooks the solutions. If all your what's the answer? It's going to be different, okay, than if you're looking at the bigger picture. So 950 square feet versus 2,500 square feet and all the amenities. It's 2 different products. But if you look at the change in the price as strictly due to inflation, you're not going to notice all the other differences that have the solutions hidden within them. And that's what I try to pull apart here. I try to piece it apart. The implication Swan was making is that people who can't afford rent should be stacking Bitcoin. And they didn't say that specifically, but they are a Bitcoin stacking company. So people who can't afford it, rent, and because of inflation, they should be stacking Bitcoin. But I don't think that's the most helpful advice. How about encourage young people to consider buying smaller, simpler homes instead? So I decided to run the numbers myself with some help from ChatGPT to create a fair comparison, apples to apples. What if we strip down a modern home to match the simplicity of a 1950s house, excluding central air, heat and air, excluding a 2-car garage, a driveway, modern insulation, and high-end finishes, which are today just standard finishes, but 1950s were high-end. Have you ever gone into a high-end, or have you ever gone into like somebody that hasn't renovated since like the 70s and they have linoleum on everything? Like that was like cool. That was a high-end middle-class finish. Today, that's standard. So these are standard finishes today that would be really high-end in 1950, if even available, right? Like some types of tile or countertops, things like that are available today and they're kind of pretty standard, weren't even available. So if you were trying to replicate them back then in 1950, it would add tens of thousands of dollars because they would have to be able to build it. Building a basic 1950s style home today using basic construction and limited features would cost an estimated $98,750. And that's what ChatGPT did when I put in some of these exceptions. And if we used prefabricated construction, the cost could be 20% lower still. Okay, so this 1950s house in 2024 gives us a clearer picture of how affordability has changed. It is still vastly higher in 2024 than 1950, but our comparison is not done. Is housing more affordable than it was in 1950? One of the questions that people don't ask either is they see the price per square foot, or they see the sticker price of a house, but they don't ask what is the mortgage payment. right? So what's the affordability of the house versus what's the sticker price of the house? So what if we compare this 98,000? Is that more affordable today than 11,000 in the past? Well, we worked it out here. So in 1950, this house, the average income, 3,300. This was a price to income ratio of 3.6. But if we built that same house in 2024 with a household income of 80,000, that's the average household income in the United States, it's only 1.2. Now we could do that for the 420. Okay, let's do that for the 420. I didn't do that because that's not apples to apples. This is apples to apples what I did on the table here. But if we do 420 divided by 80, right? It's 5.25. So yeah, that would be less affordable than the price to income ratio. But that's not apples to apples. What I'm doing here is apples to apples, and it's way, way cheaper. Now, one of the common rebuts will be, no, but they only have one income. This is not household income. This is just one income. Okay, well, let's take the average income for one person. The individual average income is 60,000 in the United States. So that's a 1.6. Still way, way cheaper price to income ratio. So what is the difference between the top line and this bottom line? Where's the inflation? All right. Okay, maybe I'm wrong, guys. Put it in the comments and we'll see. These ratios reveal that a 1950s style home is significantly more affordable today than it was in 1950. The difference is expectations. Expectations. We expect a 2-car garage. We expect a driveway. We expect HVAC. We expect all these modern things. Now, is that money printing? Is that money printing? No, it's not. While the adjusted home lacks the conveniences of a 2024 home, it also shows how much income growth has outpaced the cost of a simple home over time. Bottom line, housing affordability issues today go beyond inflation. It's largely about societal changes and elevated expectations. While homes have become larger and filled with modern features, a simpler 1950s-style house would actually be more affordable today than in the past. This isn't necessarily a practical recommendation. I just want to reframe it from just inflation. This perspective dovetails with my broader demographic prescription. So this is all part of a holistic macro thesis, a way of viewing economics and viewing the situation right now. So in order to address our issue, we're probably going to have to decrease our standard of living. So what is it also to go from a typical house today, $420,000 average house, down to a 1950s house? You have to decrease your standard of living. That's what it's about. People are unwilling to decrease their standards of living, obviously. But we have to be prepared for that because that's what's coming with a demographic crisis, demographic decline. And we had to bring that conversation, we had to bring that part into the conversation. Many young adults could benefit from reconsidering what they want in a home, realizing that today's realities do not preclude a happy family thriving in a very modest house. Okay, so that's that. I wonder what you guys think about that. Oh, one more thing. I want to bring up a response I got. So, where notifications. Okay. No, that's, sorry. Okay, this one right here. Let me share that. 141 people watching, guys. Like, comment, subscribe. Jump over to YouTube and Rumble. Like, comment, subscribe over there. Appreciate that. Trying to grow the channels. I'll get to the comments right after this. So this is in reference to that blog post I just read. It's unpopular because it's wrong. Okay, so what does he use as evidence of this? So what land are you going to build it on? A 5-acre lot sells for around $500,000. Add your 95 modest home, blah, blah, blah. Inflation has destroyed the prospects. Because he started home. Let's read these 4 bullet points. Lack of development land in desirable areas, not money printing. Government regulation and restriction, not money printing. Income, home price discrepancy. I just showed you that the 1950 style house is more affordable as a price to income ratio. So that's just wrong. High mortgage rates, both locking in current owners and pricing out prospective buyers, not money printing. So inflation is a fundamental problem. Okay, well, where is the money printing? This whole big long response has no money printing in it. He just says it is inflation. Calls it inflation because it's prices. Okay, so that's that. Let me go to the comments and see what you guys have for me. Tomek, what's going on? Yeah, you too. Have a great weekend. You're rewinding right now. Okay. One comment on the cost might be due to the cost of the land. Yep. So that's what that guy just said. Is the cost of the land more expensive compared to 1950 if we adjust for inflation? Or I guess, yeah, for inflation. I'm not sure. I've looked at in the past, like when I've been looking for a house, or I just every once in a while I like to go around and look at house prices and stuff. And at least in my area and the places that I've looked, totally anecdotal, they're not $500,000 lots. I mean, maybe he's talking about in the Northeast, somewhere close inside in the metro, and you could go 5 miles further out and find really cheap plots. But again, that's not a money printing situation, right? That's a zoning situation. If they had better zoning, if they had different regulations, it would be cheaper. But that's not a money printing problem. All right, let me see if Telegram has anything. Okay, quite a few things in here. Let me catch up. Did I call it a pardon in the article? Yes, I did, but I also used the term commute. So he actually promised to commute the sentence, which is not the same as a pardon. A pardon will wipe away the guilt, but a commutation will only end the sentence. So yeah, that is true. DT said, did my calculations include the cost of land? No, it didn't. But the cost of the land, I guess that would be in, yeah, maybe I'll have to rerun it. I'll rerun that for you guys and I'll post that on Telegram. Okay. But it can't be, it might add 20,000 depending on where you want to build the house. If you want to build the house far in, then yeah, it's going to be more expensive to buy some sort of lot and maybe tear down a house and rebuild a house or whatever you want to do with that. I mean, lots are going to be a lot more expensive depending on where you buy them and what the zoning is. But zoning laws are not money printing. Your comparison of 2024 version with single earner is an apples to apples comparison. Yes, thank you. That's why I added it because I knew somebody would say something. If you account for financing too, the calculation probably gets even worse. Real interest rates, mortgage, and size of equity equals down payment all differ between 2024 and 2050. Rates were about... Yes, I mean, rates were low in the 1950s, though. After World War II, they were lower. Of course, the highest rates were in the late 70s, early 80s. They're pretty high today, but not, they're not even half as high as they were in the early 80s. And so a lot of that inflation, if it's just inflation, a lot of that was concentrated around late, the 70s and early 80s. Evil Spock says the quality of the 1950s houses and apartments are way superior than today's. That is also a very good point. There's a lot of homes that are still standing today, but not in the technology, right? Obviously, in the wiring, in the insulation, in the ductwork, in the plumbing, that type of stuff is going to be better today. But yeah, the quality of like the framing and that kind of stuff, I totally see that. Maybe even the concrete. Maybe they use cheaper concrete today. I don't know, but you would assume that some of those materials would get better. But the wood and the framing definitely were stronger and better back in the old days. Baseboard on the walls, a new one. New ones are made of cardboard. Yeah, particle board, or not particle board, but the MDF. Yeah. Yeah, when I did my office, I tried to not do MDF. The shelves aren't MDF either. The cabinets are pre-made. I just put them on there. They're made out of MDF, but I tried to use solid wood even on the baseboards and the crown molding and stuff. I agree. Most people, especially in like those mass-produced houses, it's all MDF stuff. Yeah, and some apartments are bad. Some are good. Some are good. Some are bad. Okay, and then Yoki says, we also had financial repression in the 50s, so I wonder how accessible it was. As in, even if rates were low, could you get a loan? Quality rather than price. Yeah, that's a good question. I mean, I know a lot. That's the birth of the suburbs. Population was a lot lower. So overall, fewer people would be doing it, right? But yeah, this is a larger topic, and we should continue. We should continue talking about this. My main point that I hope got across is that we can't use this housing cost stuff as a purely inflationary argument, because it misses many of the solutions, which I think the main solution is going to be losing some of our living standards. We've gained so many living standards today, and the prices have gone up, even relative to incomes. But if we strip out and we go back down to the living standards of the 1950s, it's way cheaper today, right? So that needs to be part of the conversation, because most likely with a demographic decline, that is what we're going to be facing. Not this year. Maybe we start feeling it in 10 years in the United States. Some places like China and maybe Europe are going to feel it now. But go 10, 20 years down the road, everybody is going to feel the quality of life going down, or the living standards going down, because of demographics. And if we talk about it now, maybe we can fix something. I don't know. But okay, that is it then for today, guys. Thank you for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com. If you guys are watching on YouTube or Rumble, or sorry, if you're watching on Twitter, jump over to YouTube and Rumble. The links are in my pinned tweet. Like, comment, subscribe over there. That way I can grow the channel, and I appreciate that. All right, signing out for the weekend. Hope you guys have a great Saturday and Sunday. Touch grass. Speak to people you love. Give them a hug. Hug those people you love. Make sure you're building the good relationships. Friends and family are most important, especially if we're going into recession. We might need more of that. So thanks, guys. I'll see you on the next one. Bye.